Hi everyone, I am Vaibhav Porwal and welcome to Dezerv's monthly update. So here is what we will discuss today. First, we'll try and capture some of the key events that took place during last 1 month and their impact on our investment strategies. Second, we'll briefly touch upon the performances delivered by Dezerv's strategies. And lastly, we'll cover our outlook on the market and recommended investment strategies for the investors in the current market environment. So let's start with the key events that impacted the market last month. All the regulators had a hectic month. We started the month with interim budget. Then we followed it up by RBI's meeting on interest rate decision. And we closed the month with announcement of GDP numbers. And all these events will have significant implications on the portfolio. So let's begin with the interim budget. Though this budget was interim in nature, it definitely set the tone for what to expect from this government later this year. Two things which stood out for us. First was the fiscal discipline. The government reduced their fiscal spending compared to what they had budgeted. From the budgeted number of 5.9%, they brought it down to 5.8%. This was a great news for the bond investors because the bond prices went up significantly reacting to this news. Second thing which I found really interesting in the budget was continuous thrust on capex. Government in fact has increased their capex allocation by 11%, making it 11.1 lakh crores of spending for the next financial year, which I think is a great news for capex stocks in the market. Next in line was RBI, taking a leaf out of government's budget. RBI also gave very strong outlook on the Indian economy. Along with that, they gave a direction that if inflation remains contained, they will not mind reducing rates in the second part of the year, which I think is a great news for all the investors. In fact, the first two events outcome was largely in line with what the markets were expecting. But the big surprise in store was there when the government announced the GDP numbers for the last quarter. Against the market expectations of 6.6%, the government announced a GDP growth number of 8.4%. I think this was completely hitting out of the park, and the impact of that on the market will be extremely positive. Moving on, there is a great news. Dezerv's investment strategies across asset classes continues to generate outperformance for our investors. Though these schemes have generated significant alpha, we are mindful of the changes which are required in the portfolio. On the equity side, we believe that mid and small cap segment of the market have become extremely expensive. In fact, they are trading at 44% premium compared to large cap segment of the market. Therefore, to insulate the portfolio from any risk which can emerge, we have reduced allocation and moved towards the large cap part of the market. On the fixed income side, we have not made any changes in the portfolio. We continue to hold a combination of accrual and duration play. For us, accrual comes from holding high quality bonds, and we are playing duration by way of investing in some REITs and InvITs where we can potentially generate some capital gains. We believe that these changes will insulate your portfolio from the risk which is emerging in the market while maintaining its ability to generate outperformance. Now in the last segment, let's summarize our discussion so far and also discuss about the investment opportunities that investors can consider. Now in terms of summary of the discussion, Indian economy continues to do extremely well. We've seen high GDP growth, likelihood of interest rate cut, and this, in my view, is an extremely potent combination for equity market investors. We can expect equity markets to deliver high returns, though there is a slight wrinkle in terms of high short-term valuations. But I am very confident that this growth in economy will offset that risk meaningfully. Now, in terms of the investment strategies, there are two investment opportunities which I am quite excited about. First, because we believe that interest rates are going to go down, it's a great time to lock in your fixed income returns. Consider instruments like private credit, high-yielding bonds, and lock in your returns. You are not going to make these returns again for a long period of time. Second, within equity, continue to maintain your focus on large cap segment of the market. We are making sure that your portfolio moves towards large cap segment of the market where we believe there is high degree of value which is available for us to extract. With this, we are wrapping up this edition of Dezerv's Update. Thanks for tuning in. If you have any questions, please feel free to reach out to our team of experts and they will be happy to assist you.